Welcome to SAP S4HANA Central Finance, your gateway to streamline finance operations. In this video guide, we will provide an overview of what Central Finance is and how it can change your financial process. But before we dive in, please make sure to subscribe to our YouTube channel and click the bell icon so you don't miss out any latest videos from us. SAP S4HANA Central Finance is a powerful solution designed to integrate financial data from multiple systems into a single source of truth. Whether you're dealing with disparate systems due to mergers, acquisition, or simply looking out to harmonize the financial process, Central Finance offers a comprehensive solution. By centralizing your financial data, Central Finance empowers you to make informed decisions quickly and accurately. With a single source of truth, you'll eliminate manual reconciliations, reduce errors, and increase efficiency across your finance operations. Plus, with the built-in compliance features, you can ensure adherence to regulatory requirements. So, without any further ado, let's dive in. As a central finance or CFIN is an add-on to SAP S4HANA providing centralized financial functionality. As a product, it comes with enabling technologies like data replication, mapping, error handling, and reconciliations to connect different financial systems onto one platform. As a solution, central finance allows companies to execute financial processes like close, reporting, planning centrally across multiple source systems, both SAP and third party. It establishes a central financial system aggregating real time transactional data with disparate sources into one version of financial truth based on S4 HANA. Key capabilities include Universal Journal as a staging area, virtualization of central document into SAP, and unified reporting bringing together data from SAP ERP, third-party systems, and S4HANA in single report. SAP Central Finance enables integration of financial data and processes across heterogeneous platform into central SAP S4HANA system. It allows gradual transition from dispersed SAP or non-SAP financial system towards unified central finance instance with standardized process. Central finances uses near real-time replication to bring a financial document into journal entries. Customer invoices, cost allocation from source system, virtualization technology maps external data into familiar SAP document. Reconciliation reports are available to validate total between operational system and central finance. Drill down functionality provides visibility into the replicated document from the source instances. For SAP systems like S4HANA or ECC, real-time connectivity options exist for two-way position between central finance and book on source system. For non-SAP system, near real-time data integration in achieving using SAP predefined magnitude connectors. Data flows via online interfaces and periodic batch uploads. This ability to consolidation varies SAP and third-party financial data with flexible transition strategies makes central finance and strategic integration layers across heterogeneous platform on the journey towards process standardization. The diagram depicts SAP's step-by-step approach for implementing central finance to consolidate financial data and processes for different source systems. It starts with establishing central finance on SAP S4HANA as the target centralized finance platform and replication server. In parallel, source systems like SAP ECC, S4HANA nodes, and non-SAP third-party systems are identified that need to feed into central finance based on the consolidation requirements and priorities. Standardized interfaces and pre-built adapters allows near real-time integration for journal entries, master data, profitability data, and other financial transactions from source system on the ongoing basis. Central finance orchestrates in aggregating of data into unified information model. Virtualization and reporting allows harmonized view across multiple inputs now available in one place. Over time, more and more source systems can get connected in phased manner to incrementally shift finance processing completely into central finance and end state into decommissioning those disconnected operational system when financial transform gets completed. The step by step orchestration of processes, data, and system is the key central financial methodology for harmonizing finance functions into a common S4HANA platform. Central finance consolidation brings several disadvantages of companies operating multiple countries, system processes, charts of accounts, and reports in disconnected financial environment. Master data harmonization, a global chart of accounts and reporting taxonomies accelerate standardization efforts crucial for centralized visibility. Centralized financial processes bring together financial close, general ledger reconciliation, intercompany elimination, management reporting onto a common platform, and rules and schedule greatly, improving quality and speed. Centralized financial reporting becomes possible across business units and data sources, leading to greater transparency and single version of truth. This also feeds the downstream needs for group consolidation and corporate planning cycles with consistent data. Reduced reconciliation effort since intercompany transactions are already streamlined on the same system and with data readily available in SAP formats, less time spent in the system consolidation during the merger and acquisition. In summary, central finance on SAP S4HANA enables not only unification of current processes spanning master data, transactions, and reporting, but also springboards for next generation finance capabilities for sharp insights. A large healthcare and consumer product manufacturer was struggling with fragmented system and inconsistent financial data across multiple countries. With over 10 different ERP systems, processes were not standardized and reporting meant manual consolidation leading to delayed insights. By implementing SAP Central Finance S4HANA as the first step, they were able to harmonize the data model and establish a global chart for account structure. This unified general ledger now provides the foundation for optimized financial reporting across business units and enables consolidated views needed for group reporting. Having a consistent global COA also allows processes like intercompany elimination, management overlays, financial close to centralized on central finance for simplified governance. The harmonized master data coupled with standardized financial workflow has reduced reconciliation overhead and manual effort during the month end closing while providing a real-time financial reporting. This positions the organization with accurate data and flexibility to leverage future S4HANA innovation like predict analytics for sharper decision. When central payments is activated for particular legal entity, any open vendor invoices and customer receivables are in the connected operational system gets cleared are closed in those source systems. Instead, corresponding systems open items get created within central payments, which now becomes the system of records for pending settlements. This means ongoing basis all customers and vendors open item management including the due date tracking. Dunning and dispute handling gets exclusively managed in central payments. Downstream settlements processing like bank file generation, account transfers, payments, confirmation will all occur centrally inside central payments. Related to reporting like open aging, collection, analytics, and cash forecasting will also shift to leverage central payment content, no longer relying on source system documents. For SAP ECC system, this allows near real-time one-way integration without having to reflect back payments status to synchronize. Payment activities remain uncentralized while other fulfillment continues to ECC. This transfer of open item processing and settlement execution into central payment streamlines reconciliation while achieving central control. Central payments delivers several advantages for companies running decentralized cash and settlement operation. Real-time open item status, including pending invoices, cancellations, and payments, are visible in one central finance system rather than relying on periodic updates from multiple books. Bank master data and account administration gets consolidated similar to a shared service banking center, improvising compliance. Related process like collection, disputes, cash, application run centrally, allowing better focus for teams rather than fragmented effort. Reduces total number of bank accounts and associated transaction fees by optimizing payments traffic across fewer cleared accounts. Centralization enables staff skills and concentrations on efficient payment processing versus managing regional complexities. Standard SAP interfaces consumes normalized bank statements feed, avoiding custom passes. Enables enterprise wide variety and control for bank communication, cash transaction, and settlement execution by businesses, unit, or geography. In essence, central payment delivers process optimization plus cash visibility that is extremely vital for the efficient working capital operations in large global business. The diagram shows critical business processes across sales, procurement, and finance that requires adaptation of SAP Central Payment gets activated. While the operational order to cash and purchase to pay processes remains unchanged, in connected SAP or non-SAP systems, the settlement aspect shifts to into central payments. Receivables like customer invoices, payables like vendor bills gets reflected as open items in central payments through near real-time integration. Downstream settlements execution for these pending open items, including bank file generation, payment confirmation, accounting, all occur centrally within SAP Central Payment. Even bank statement processing, account administration, cash positioning gets handled in central payment going forward. Related to finance activities that depend on payment status, cash data like collection, discounts, and revenue reconciliation have a leveraged central payment as the primary system for now on. So while transaction continue to source system, the payment processing dependency shift towards centralized logic and data in central payment requiring some redirection of business users like collectors and accountants through roles and workflows. This end-to-end diagram depicts the procure to pay process flow spanning purchase requests to vendor payment settlement, highlighting low central payment fits in. Operational procure to pay system remains in connected SAP or non-SAP system like issuing purchase requisition, raising purchase order, reforming goods receipt, and getting vendor invoices processed for bought material or services. As invoices get posted, related payable accounting entries hit the book. Now, pending invoices appear as open time in central payment through real time integration. Central payment takes over payment related activities next. Payment proposal get generated to fund clearing open vendor bills, bank transfer through payment runs, square those payables. Payment confirmation updates vendor invoice status centrally. Finally, statement processing and payment accounting also occurs within central payment, while ongoing procurement continues in sources system. Corresponding payments execution shift to central payments, ensuring consistency. Account payable teams now monitor vendor items and initiate settlements in one centralized location, greatly improving efficiency. Looking at the order to cash flow or process, we again see operational activities like sales, order creation, delivery, invoicing happens on the connected SAP or third party system that where customer transaction originates. As customer invoices hit the books related to account receivables, open items are visible in central payment in real time through standard integration. Now all collections related to workflow shifts to central payment. Dunning case management, payment reminders, cash forecast, and customer aging analysis leverage centralized data for accuracy and consistency. Incoming customer payments made towards open invoices get posted into central payments for account settlements. The statements, reconciliation, and payment accounting all occur here. So while order fulfillment processes continues to downstream on sales system, central payments becomes the hub for managing accounts receivables, open item, and end-to-end handling everything from danning to bank statement reconciliation for that customer. This split of responsibilities along process maturity allows organization to retain required operational flexibility on books while channeling transactional complexity info a central payment factory model improving efficiency and managed skills. A large European beer manufacturer was struggling with over 25 disjointed SAP systems across business unit and region. This was creating disconnected financial processes and reporting delays. By adopting central finance and central payments on SAP S4HANA, they were able to consolidate all Europe instances into single financial foundation in the first phase itself. Having one accounting scheme, common master data, and standardized payment process allowed their shared services team to gain significant efficiency. Reporting became harmonized with real time data, month end closing effort reduced to half through automation while still retaining transactions within local operation system, bank connectivity, cash positions, and working capital views were now enterprise wide. Overall, central payments allow decentralized transaction flexibility while channeling process complexity into streamlined, centralized payment factory, cutting costs and delays while improving compliance. The plug and play connectivity template workflows are pre built content allows faster adoption across current dispersed financial system into the target centralized landscape. Appendix: one book of account with central finance examples. The key value position of SAP Central Finance is establishing a common centralized general ledger and charts of accounts by consolidating data from multiple source systems. Some examples of how customers have benefited from master data and transactions harmonizing are global manufacturer consolidated 10 different global ledger systems in centralized finance across global businesses unit allows intercompany reconciliation and single PLM reporting. Retail chain centralized financial data from multiple brands and franchises with different charts of accounts into one consistent taxonomy on SAP S4HANA for governance and performing tracking. Technology company. Merged acquired companies are disparate billing systems scattered across product lines into central finance for standardization and financial process consolidation. Pharma leaders. Central Finance unified master data and transactions from SAP and non-SAP instances across their R&D centers and manufacturing plants, enabling unified analysis. As an evident as evident from these real world scenarios, central finance has helped enterprises realize that global chart accounts across diverse systems by reducing data and process fragmentation. This set off the foundation from driving simplification, productivity, and data driven insights leveraging S4HANA. This diagram depicts a high level view of the central finance architecture and its integration with source operational system. At the bottom, we are heterogeneous source system planning, SAP ECC, S4HANA, as well as third party or non SAP systems like Oracle running across different business units. Central Finance sits at the top aggregation layer powered by SAP HANA as the common data foundation. Replication interfaces from Universal Journal brings in the financial data like journal entries and master records source system in real time. Virtualization adapters map third party data into familiar document structures. Within central finance, virtualization and reporting allows harmonized access across multiple inputs now available in one place, while retaining connections to original system for drill downs where needed. Key components also include shared master data in like customers and suppliers and unified accounting rules, reporting using SAP BCP tools for consolidation needs. The business context remains defined through organizational hierarchies and processes in the source system, while transactional complexity gets channeled into the centralized finance layer above for simplification. This allows retaining local flexibility while harmonizing finance. Integration is eased through the pre-built connectors and templates that accelerates implementation by avoiding extensive mapping during data consolidation. These diagrams depict how sample vendors invoice posting in ECC flows through central finance as the target consolidation system. On the left, in the source ECC, a supplier bill booking is done against a cost center using transaction FB60. This debt, trade payables, and credit outgoing cash accounting entries and from this hit the ECC general ledger accounting financial reporting on this system earlier. On the right, simultaneously, Central Finance replicates this document through standard interfaces into Universal Journal. Account mapping creates corresponding debts, debit and credit in Central Finance General Ledger. Virtualization adapts data to look alike in native S4HANA document for similar or familiar user access. Multiple ECC instances can fed transaction this way. Unified in Central Finance GL brings together feed from ECC S4HANA system as well as non-SAP system into single reporting ledger, allowing consolidated finance view across sources. These screens illustrates how master data like chart of accounts get mapped across source system in central finance. On the left is the sample profit center hierarchy and cost element structure from source ECC. In the center is a standard central finance chart of accounts already defined based on leading practices. On the right, we see that how mapping connects source ECC co- cost centers and cost elements into corresponding general ledger account in central finance. These account mapping are defined during the integration process between the two systems. Similar mapping logic applies for customer, vendor, master recording, bringing them into consolidated supplier and customer accounts in central finance by assigning the right reconciliation identifier. Pre-delivered mapping context. Field mapping templates and drag drop functionality greatly reduce reconciliation complexity that may otherwise hamper such consolidation projects. By enabling quick, reusable mapping for master data and transaction flow into central finance, integration overhead in minimized while time to value gets accelerated. The diagram depicts an example reconciliation workflow between transactional data in source ECC and corresponding virtualized view in central finance after replication. As product cost posting occurs in ECC related to accounting entries and hit the general ledger real time, ECC reporting would reflect these entries immediately. In parallel, central finance get these entries replicated into its system through standard interfaces into universal journal first. The virtualization creates VGL documents which resembles how data would natively appear in S4HANA. The reconciliation process periodically compares total between ECC and Central Finance VGL across dimensions like company code, accounts, profit center, accuracy, errors, if any, logged for analysis. Drill down capability allows tracing transaction from consolidated views in Central Finance into originating documents in source ECC. This validation workflow ensures replication of ECC data into central finance happens accurately without transformation, hindering subsequent reports and analytics. Loss data transfer maintains integrity across operational and consolidation layers. Such reconciliation routines also run during the key process like financial close to validate before central finance reporting number are published enterprise wide. When posting interfaces brings in transaction data from non-SAP source system into central finance, some errors may occur during replication for transformation as depicted on the left. Source intakes like BODS data services populate. Redo page 21. When posting interfaces bring in transaction data from non-SAP source system in central finance, sometimes error may occur during replication or transformation. As depicted on the left, source interfaces like BODS data service populate data files which get consumed for account posting in central finance. In case of any issue like invalid field or data gaps, error records get written out, including technical details like description, field value, timestamp, etc., as shown on the right. Central Finance leverages SAP Application Interface Framework or AIF to classify severity, capture screenshot, and pre-process errors before handling of to basis teams and rectification. Error monitoring dashboard provides visibility for technical users to track root cause and correction status. This embedded error handling across stages of extraction, transformation, and load step when ingesting non-SAP data enables central finance technical term to run reconciliation check, trace data inconsistencies, and ensure corrective procedure. By identify reconciliation break or data quality issue closer to source, integrity of subsequent financial reporting gets safeguarded. There are some important technical and configuration steps needed upfront before central finance implementation. On the IT side, the basis team activates necessary SAP nodes and system settings to enable central finance capabilities. The core SLT and system landscape transformation replication server is configured using master guides. SAP configuration perspective, key entities get defined upfront like company code structure, document types for revenue, cost processes, number range, intervals, currency master data, corresponding document splitting logic. Underlying integration components like exchange rates, functional areas that controls posting behavior and defining trading partners for mapping external organization also need setup. Additionally, central finance requires master data objects to be created upfront, like general ledger account, cost centers, profit centers, internal orders, and work down structures, especially for the reporting lens. These upfront technical and configuration activities contains in system measurement, document accelerate projects, and process by proactively addressing prerequisites by enabling customer team to focus on business process transaction into central finance rather than be bogged down by basic system related issue. This diagram illustrates how transactional data from source system gets replicated into central finance as the consolidated layer. Operational source system like SAP ECC, S4HANA or third party continue processing journal entries for accounting, revenue recognition and cost allocation. Backend integration regularly extracts financial data like general ledger posting, account receivable, payable open items, profitability entries, and corresponding master records. The SAP landscape, transformation replication servers brings this data into central finance staging layer called Universal Journal. This hub handles validation, error handling, and NQ processing before posting. Finally, virtualization constructs familiar documents like journal vouchers, customer open item tables, cost allocation in central finance system for simplified access. This continuous feed of financial data for heterogeneous system gets harmonized in central finance through standardized master data and process like common COA. Virtual access, analytical reporting, and drill downs provide consolidated financial visibility across federated enterprise landscape while retaining local transaction flexibility.